You work hard, pay your bills, try to save when you can. Maybe you even took a course, bought a house, financed a car, invested in something someone recommended. And even so, the account doesn't add up. Time passes, the salary comes in, and the money disappears. You survive, but you never prosper. And then comes the question that rings in many people's heads: what am I doing wrong? Let me tell you something that perhaps no one has said clearly. The problem isn't just in how much you earn, it's in what you keep. What do you do with the money when it comes in? Because a lot of people put their hard-earned money into things that seem good, but are real traps. These are assets that have an investment name, an investment smell, even investment advertising, but that in practice only drain your pocket. When I was younger, I also made this mistake. I bought stocks that I didn't understand. I went after hot opportunities. I let myself be carried away by other people's enthusiasm. I took a few falls. And I learned that getting rich is not about speed. It's about direction. You can walk fast, but if you're on the wrong road, you'll only move further away from your destination. There are people who buy luxury cars to feel good, spend more on insurance than on stocks. There are people who get excited about a new course costing our $30,000, but don't stop to think about whether that knowledge will generate real returns. Others change their cell phones every year while their bank account remains the same since 2015. And many get into fads, into franchises that seem easy, into crypto assets that don't stop going up, and think that now, yes, it will work. It just doesn't work. What these people don't realize is that there are assets that seem promising but have one characteristic in common: they drain wealth rather than build it. They're like leaky buckets. The more you put in, the more escapes. And the most dangerous, just that no one teaches you this in school, and most gurus won't tell you either, because it's easier to sell hope than to teach patience. In this video, I want to show you the 10 worst assets that keep you poor. Assets that are often sold as wonderful opportunities, but that in practice keep you at square one, or worse, they make you go backwards. It doesn't matter if you earn $1,000 or $10,000 a month. If you keep putting your money in these assets, the math will always be against you. My goal here is not to scare you. It's giving you clarity, because once you understand what silently drains your wealth, you can plug the holes. It can change the game. You can stop chasing money and finally make it chase you. So if you're tired of trying to do everything right and still not seeing results, maybe it's time to look at where exactly your money is going, because it's not enough to win. It needs to be protected. And investing intelligently starts with a simple attitude: avoid a kilo that impoverishes you. Let's get started. If there's one thing that a lot of people make a point of showing off, it's the car they drive. It doesn't matter if you're in debt, your account is in the red, or if you can barely pay your insurance. The important thing is to go out on the street in a car that makes noise, not the noise of the engine, but the noise of the status. Luxury cars are, for many people, symbols of achievement. However, in practice, they are also one of the worst assets for those who want to get really rich. Let's be clear here. A car is not an investment. It never was. It is a consumer good that depreciates the minute it leaves the dealership. It doesn't matter how beautiful, technological, or desirable it is. In 5 years, its value will have fallen by half, and you will still have spent a fortune on IPVA insurance, maintenance, fuel, and of course that tire change that costs almost the value of a used popular car. Look, I'm not against good cars. I am against irrational purchase of cars that your pocket cannot support, just to feed a fragile ego. If you have assets, cash, and a solid investment, and you want to give yourself that pleasure, that's fine. But if you're using your car to appear richer than you are, you're only burying your chances of building real financial freedom. What makes you rich is not the car you drive. It's how much you can multiply what no one sees: your invisible assets, money in good companies, capital growing in silence, and above all, the ability to say no when everyone around you is saying yes to yet another debt paid in 48 installments. Want to know if your car is an asset or a liability? It's simple. Does he pay you something every month, or does he charge you if it takes money out of your pocket? It is not an investment. It's a luxury, and perhaps a burden disguised as an achievement. And the most curious thing, the real rich don't need to prove that they are rich. They know the game is not about appearance, it's about lasting. When I was younger, I observed this closely. I met a lot of people who earned it well and drove luxury cars, but they were always broke. Why? Because the car was not a tool. It was an emotional trap. It was bought to impress others, not to meet a real need. And let me tell you a secret. Nobody cares about your car as much as you think. Maybe they'll look once, maybe they comment for 5 seconds, but then they forget, and you keep the installments. I myself, for many years, drove modest cars, not for lack of money, but for clarity of purpose. I know what makes me rich. And it's not the model of my car, it's what I do with the money I have. I didn't spend in it. It is the capital that I left invested, growing, multiplying. While many drive finance BMWs, I preferred to ride in an old car with the freedom of knowing that every unspent dollar was working for me. One of the biggest financial illusions that people have is that buying a big house is always a smart investment. After all, you are building wealth, right? Well, not always. Sometimes what you're building is just a prison with luxury finishing. I've lived in the same house since 1958. It's a comfortable, simple house in Omaha. It's not a castle. That doesn't have 20 rooms nor a panoramic elevator. And you want to know, that's all I need. Because I understood a long time ago that the size of the house does not define the size of my happiness, much less my wealth. What a lot of people forget is that a house doesn't just cost what's on the deed. It consumes. She demands. And if you buy more than you need, or more than you can afford, you end up becoming a slave to your own roof. It starts with heavy financing. Then comes the IPTU, condominium maintenance, expensive furniture, endless decoration, pool to clean, yard to take care of, and what was supposed to be a symbol of success turns into a financial hole that drains your energy and money month after month. A home should serve your life, not dominate your budget. But what I see most are people with tight salaries living in real palaces and barely being able to breathe between one bill and the next. They buy the house of their dreams, but live a silent nightmare, sleepless nights, cards at their limit, zero margin for unforeseen events. And all why? Because they believed in the idea that growing in life is synonymous with living in a place that impresses others. But let me tell you, impressing is expensive, and it almost never pays off. True, real estate investing isn't one that suffocates you. It's one that preserves your cash, your peace, and your freedom. It's the one that allows you to invest what's left and not just pay bills, because at the end of the day, your dream home can't stop you from building the life of your dreams. A lot of people look at me and ask, with so much money, why do you still live in that house? And my answer is simple: because it gives me what I value: comfort, stability, and safety margin. I don't need more square meters. I need more autonomy to decide where to allocate my time, my energy, and my capital. When you buy a house above your reality, you are not taking a step forward. You are tying an anchor to your foot, and the worst, with a smile on your face, thinking you got a great deal. So think about it. Is your home bringing you closer to freedom, or is it taking you away from it? If it's the latter, perhaps it's time to remember that size isn't everything, and that a smaller, smarter, and cheaper home could be the missing springboard to build a much bigger life. If there's a phrase that marketing loves to use and that a lot of people love to hear, it's installments that fit in your pocket. But what almost no one tells you is that these installments over time can fit neatly into one thing: the plan of those who profit from your haste. Financing is the new standard. Car in 60 times, cell phone in 24, sofa in 12, course in 36. The windows no longer show the total price, show the installment, and that is deceiving, because when you focus on the installment, you forget to look at the real cost. And here's the blunt truth: most people don't buy things, buy debts. It does not acquire a good, it acquires an obligation, and it turns what could be an achievement into an invisible chain that accompanies you for months or even years. Look, I'm not saying that all financing is bad, but the question few ask is this installment plan bringing me closer to financial freedom or further away from it? When you finance on impulse without planning, you are gambling against your future. You are saying, I prefer to have it now and pay more later, even if it costs me peace of mind. I've seen this happen to smart people. They buy things financed because you can't wait, or because the interest is low. But the problem is not the interest on a purchase, and the accumulation of small debts that never stop arriving. And in the meantime, the opportunity to invest, to multiply assets disappears. You become a hostage to the cycle. You earn, pay installments, wait for the next salary, and repeat. Everything seems under control until something unexpected appears, and then the house shakes. When you buy something financed, you are saying yes to consumption and know your margin of safety. And security is what separates an unforeseen event from a crisis. It's what allows you to take advantage of good opportunities when they arise, and they always do. But he only sees those who are not bogged down in bills. My philosophy has always been, if I can wait, I will. If I can buy in cash, I will. And if I can't, I don't buy it, because I prefer the weight of waiting to the weight of debt. The financial market works like a scale. Or are you on one side receiving interest on your money, or is it on the other paying interest for being early? And it is this anticipation that keeps many people always in the same place, rushing to pay for what has already happened without being able to invest in what is to come. So the next time you are offered easy installments, ask yourself, am I making my life easier, or making it easier to make a profit on the other side of the counter? Because freedom cannot be achieved by paying in installments. It is achieved by giving up today to have more tomorrow. So I always say that the best investment anyone can make is in themselves. But here's an important addition that almost no one talks about. Investing in yourself does not mean spending fortunes on any course that appears out there. Nowadays, it seems that education has become synonymous with status. There are people who pay our $30,000 and even our $100,000 for a course just because it has a famous name, a nice certificate, or because everyone is doing it. But let me ask you, is this generating a return? Because if it's not, then it's not an investment, it's just a fancy expense. Throughout my life, I have received hundreds of proposals for courses, MBAs, specializations, many with very high prices. And do you know what my filter has always been? Is this going to make me better at what I already do well? If the answer is no, I'll pass. It's not the diploma that makes you rich. It's what you do with the knowledge he should have given you. I met people with brilliant CVs and empty bank accounts. At the same time, I met people with simple backgrounds who built empires. The difference, application, clarity, return. The problem is that many people use the course as an escape from action, responsibility, difficult decisions. They think that one more certificate will solve what in reality can only be solved with practice, hard work, and courage. Now, don't get me wrong, I'm not against studying. I'm against spending a high amount of money on something that doesn't bring you closer to your goals. You can learn more by reading a $50 book with full attention than by taking a $50,000 course just to put on LinkedIn. Before investing in any training, ask yourself, will this generate me real income? Will it increase my decision-making, execution, and value generation capacity? Will you open specific doors for me? If the answer is vague, emotional, or based solely on fear of falling behind, then perhaps the course is too expensive, not in the price, but in the non-existent return. Remember, an expensive course that generates no return is like putting fuel in a car without an engine. You're just burning money sitting around. I prefer to invest in learning with predictable returns. If I spend $1,000, I hope to extract $3,000, $5,000, $10,000 from what I learned. And it doesn't matter if the content came from an elite course or an old book found in the library. True knowledge doesn't have to be expensive. It needs to be useful. And above all, needs to be used so the next time someone offers you unmissable training, stop and think, will this course give me more clarity or just more debt? Because on the journey to wealth, knowledge is an asset, but only if he puts more money in your pocket than doesn't take it out. Technology is fascinating. It shortens distances, improves processes, connects people, and gives us incredible tools. But it is also often one of the most insidious assets you can hold, especially when you're not buying technology, but status disguised as innovation. You know, that the new cell phone that just launched, it costs the equivalent of 2 months of your salary, but you were promised a better camera, a faster chip, a screen that shines brighter. You already have a working cell phone, but you couldn't resist. And then the minute you took the device out of the box, do you know what happened? It started to lose value. And I'm not exaggerating. Consumer electronics are some of the goods that depreciate the most in the short term. A high-end smartphone can lose 30% of its value in a few months. An expensive notebook too, not to mention the tablets, headphones, watches, and the entire ecosystem of accessories that come with it. Now, don't get me wrong, I'm not against technology. I'm against spending on it without criteria, without return, without purpose. What I see most out there are people with $7,000 cell phones and a zero bank account. People with 3 screens at home but no investment generating dividend. And the most curious thing, many use these devices just to consume more social networks, more distractions, more purchases. Think about it, you are using technology to produce more, learn more, sell more, or are you just using it as a form of entertainment disguised as necessity? If your cell phone is smarter than your financial strategy, we have a problem. Why technology should be a capability multiplier, not a vanity multiplier. Every time I think about buying something new, I ask myself, will this generate a return for me? Will it save my time? Will it measurably improve my performance? If the answer is no, I let it go because I prefer to see my money growing in real assets, productive companies, solid businesses, sources of income, rather than in equipment that is worth less with each operating system update, and there's more. Many of these purchases are financed. In other words, in addition to devaluing, you still pay interest for having something that becomes old in a short time. The truth is simple. No one became rich because they had the best cell phone in the room. But many people stopped getting rich because they exchanged wealth for appearance. So the next time you're tempted to buy the latest model, stop and ask, is this going to move me forward or just keep me more up to date on Instagram? Because at the end of the day, what really matters, it's not the brightness of your screen, it's the brightness of your balance.
Have you ever noticed how from time to time a new business favor appears that promises quick and easy profits? That's the gourmet acai store, the cookie franchise, the Instagrammable coffee kiosk, or that network of automatic machines that claim to operate on their own while you sleep. And the speech is always the same, just follow the model, the name is already known, and in a few months the profit will come. But what no one tells you is that most of the time, this promise does not come with a guarantee. It comes with a bill. Fad franchises are seductive. They present themselves with beautiful packaging, a well-edited success story, and a standardized contract. But behind that, often what exists is just a generic product disguised as a unique opportunity. What concerns me is not the franchise model itself. There are excellent networks with a solid proposal, competent management, and a long-term vision. The problem is, in herd effect, when everyone starts opening the same type of business in the same neighborhood, something is wrong. I've seen this happen with ice cream shops, 24-hour gyms, vape shops, food trucks, capsule cafes. At first it seems like everyone is winning, but soon the demand dilutes. The margin disappears and the investor who came in excited, you are left with an empty commercial location and an active debt to pay. Want to know the truth? Good business does not depend on trends. It depends on fundamentals. If your profit only exists because you are surfing a momentary wave, then it will go away with the tide. And this goes for any sector. When I evaluate a business, I ask a very simple question. Will this product or service still be needed in 10 years? If the answer is uncertain or depends on passing fads, I'll pass. Now think, how many of these franchises that exploded in the last 3 years will still exist in the next 5? Another important point is what I call operational vulnerability. Many fad franchise models have tight margins, high fixed costs, and a total dependence on the physical location. This means that all it takes is rent to rise, business to fall, or a new trend to emerge, and everything falls apart. True entrepreneurship requires study, patience, and risk analysis. And that starts with the question that few ask. Why are they offering me this model so readily? If the network were truly profitable, perhaps it wouldn't be so desperate to grow at any cost. And perhaps the owners were busier generating cash than selling promises on colorful slides. If you want to have your own business, great. But understand that the best business is one that you understand deeply, that solves a real problem, and that doesn't depend on the passing enthusiasm of the crowd. Franchises can be a good way, but fad is never a solid basis for anything. So the next time you are offered the next big thing, remember, real business doesn't need to convince you. It needs to prove to you that it works.
If there's one rule that has guided me throughout my life as an investor, it is this: never invest in something you don't understand, just like that. It may seem too basic, but that's why it works.
And that's exactly why so many people ignore it. You would be surprised how many people put money into assets, funds, financial products, and miraculous promises without asking the most essential question of all. How does it work? They buy because their cousin recommended it, because their coworker said they doubled their capital, or because they saw a promising advertisement on the internet. But when it comes to explaining where the money is, what it generates, where the profit comes from, and what the risks are, silence reigns. And let me be straight with you. If you don't understand what you're buying, you're not investing, you're betting. And the market is not usually kind to uninformed bettors. When you buy a business, whether it's a publicly listed company or a small bakery in your town, you need to understand what it sells to whom, how it makes money, what its costs are, what the difference is, and how it sustains itself over time. If you can't explain this clearly, then you are acting in the dark. I was once asked why I didn't invest in certain technology companies at the height of the boom. My answer was simple: because I don't understand enough about them. And that doesn't embarrass me, it protects me. You don't need to have an opinion on everything. You just need to have conviction in what you understand. Investing outside of your zone of understanding is like driving at high speed on a road you've never seen. At first it may seem exciting, but all it takes is one unexpected turn, a damage arrives. Furthermore, when you don't understand what you have, you become hostage to market emotions. If the price goes up, you celebrate without knowing why. If you fall, you panic. You are vulnerable to gossip, occasional gurus, and impulsive decisions. Now, when you understand what you bought, none of this shakes you. You know what you have. You know the basics. You don't need others' approval. You have clarity. My suggestion: make it a habit to write in your own words why you are putting money into a particular application without copying anyone's explanation. If you can't do this in a simple paragraph, it might not be time to invest yet. And remember, you don't need to have 100 good ideas. You need to have half a dozen ideas that you deeply understand and act with discipline on. A good investment is not one that looks promising in the advertisement. It is the one who you understand, believe, and can maintain, even when the world around you is in panic.
Probably heard someone say if I had bought Bitcoin in 2010, I would be a millionaire today. And technically it's true. But this is the most dangerous phrase in the world of investments. It turns exceptions into rules, and it seduces thousands of people into putting money into something they can barely explain. Cryptocurrencies, blockchains, tokens, and NFTs are terms that for many still sound like another language, and yet crowds enter these markets every day, not out of conviction, but out of hype, because they heard that it will go up, because everyone is buying, because they are afraid of missing out, and it's exactly at this moment that the losses begin. See, I'm not against technology, and I'm also not saying that the crypto world has no value. The problem is not in the asset, it's in the reason you buy it. If you invest in something you don't understand, motivated only by euphoria, you are chasing smoke. You are handing over your money to a highly volatile market without any kind of emotional or technical protection. And when the tide turns, and it always does, you'll probably sell at a loss because he was never clear about what he bought in the first place. It's important to remember a cryptocurrency, it is not a business that generates cash. It doesn't sell products, it doesn't pay dividends, it doesn't have recurring revenue. Its value lies in large part in the perception that others will pay more in the future. This may work for a while, but it's not a solid foundation for building long-term wealth. I like investing in businesses that I understand, companies that sell something concrete, generate predictable profits, and have a clear competitive advantage. This gives me peace of mind. It allows me to sleep at night even when the market is falling. Now tell me, do you sleep peacefully with your money in crypto? Or do you wake up every day checking the graph, hoping it hasn't gone down? Many people buy cryptocurrencies not because they believe in the technology, but because they saw someone getting rich. And let me tell you, investing based on envy is the quickest way to become poor. If you want to enter this market, that's fine. But study deep, understand the fundamentals, the risks, the cycles, and above all, never put in more money than you are willing to lose. Cryptocurrency can be a part of your portfolio if it makes sense for what you believe, but if it's your hope of getting rich quick, so it's just another trap disguised as an opportunity. And as I always say, the market is made to transfer money from the impatient to the patient. One of the simplest and most powerful questions you can ask before investing in a company is, does it generate cash? I'm not talking about projections, promises, or pretty slides. I'm talking about real money. Net profit can be manipulated, growth expectations can be inflated, but the cashier doesn't lie.
And yet every day, thousands of people put money into companies that can't generate not even enough to sustain itself. They bet on businesses that are always in potential but never in the present. Maybe you know some popular companies with a name in the media, sky-high market value, and recurring losses. They live by raising rounds, issuing shares, taking out loans. But when you look at the operation, you realize that more money goes out than comes. And that, my friend, is not good business. It's a leak. When I buy shares in a company, I am buying a fraction of a business. And I just want to own businesses that they sell something real with a healthy margin, reinvestment capacity, and above all, cash flow. Because it is cash that pays dividends. It is the cash that supports growth. It is the cash that protects against crises. Now, why do so many people ignore this? Because they are looking for stories, not foundations. They are seduced by narratives of disruption, technology, speed, but they forget that at the end of the day, a company exists to generate value, and this value appears in the cash register. I've seen many companies with billion-dollar valuations, but negative cash. And when the market tightens, when credit dries up, interest rates rise, or investors become more selective, these companies collapse because they don't have their own fuel. They live plugged into external capital, and at some point the plug is. So whenever you look at an investment, ask, does this company generate cash? If it generates, how much? Is this flow growing or burning capital? If you can't answer, or if the answer is not yet, but in the future, be careful. You could be buying a dream packaged in marketing and financing it with your money. The best deals I've ever bought had one thing in common. They generated money today, not just tomorrow. And they had the capacity to continue doing this for many years. This is the type of asset that builds real wealth, silently, consistently. Remember, a company without cash generation can even be in the news, but it will hardly be heralded. If there is one asset that keeps more people stuck in mediocrity than any other, it is this: the constant search for shortcuts, the obsession with finding a magic formula, a secret method, a way to skip steps and achieve success without going through the process. And let me tell you clearly, there is no shortcut to building lasting wealth. Those who try to cut corners almost always end up further away from their destination. You've seen this: the person who enters day trading thinking they will become rich in 6 months, the one who buys courses with miraculous promises, live on income in 30 days, become a millionaire with one click, or the one that enters into schemes disguised as business that look more like a pyramid with a suit and tie. They all have one trait in common: press. But haste is the enemy of depth, and true wealth requires depth of knowledge, of strategy, of execution. When I see someone saying, "This is easy, fast, and guaranteed," I run in the other direction, because anything that promises high returns, low risk, and effortlessness, it's a lie or an illusion. Or worse, it is a trap prepared to capture the impatient. I've always preferred the slow and sure path, the path that requires discipline, study, repetition, because it seems time-consuming at first, but it is precisely this path that creates powerful compounds over time. The truth is that the money game is not about who runs the fastest, it's about who lasts longer doing the right thing. And the problem with looking for shortcuts is that in addition to diverting you from the correct route, they steal the most precious thing of all the time. You jump from method to method, from promise to promise, from hype to hype, and next thing you know, you've wasted years trying to cut corners when you could have really advanced steadily. Those looking for shortcuts live in expectation. Those who follow the right path make a living from construction. And building is not glamorous. It's learning the basics. It's about investing consistently. It's spending less than you earn. It's studying before acting. It's making small mistakes and making big mistakes. Does it seem too simple? Perhaps. But that's exactly why it works. And that's exactly why most people ignore it, because they prefer the illusion of the fast to the truth of the solid. So if you really want to get rich, the best thing you can do is abandon the shortcut mentality. Stop looking for the magic formula. Build yours. It will be made of patience, clarity, and repeatedly good decisions. Because in the end, the real shortcut is this: do right long enough. After everything we've talked about, luxury cars, oversized houses, useless courses, gadgets, cryptocurrency bought by hype and cash-strapped companies, you might be wondering, so where, after all, should I put my money? The answer is simple and at the same time deeply ignored by the majority. The best asset you can buy, and no one told you, it's you. That's right, your mind, your ability to think clearly, your ability to make good decisions, one after another, your discipline in ignoring the noise of the world and following what makes sense in the long term. I know it doesn't sound as exciting as a stock that appreciates 300% in a week, does not generate likes on Instagram, you can't show it in the feed, but it's the only investment that no one can steal from you, tax, freeze, or devalue overnight. When you improve yourself, when you develop your reading skills, analysis, patience, communication, resilience, everything around you starts to improve too. You better choose where to put the money. Avoid the traps that trap so many. He has the courage to wait when everyone is running and act with conviction when real opportunities appear. I like to say that knowledge behaves like compound interest. You don't feel anything at first, but over time it accumulates. And there comes a time when growth becomes inevitable. The problem is that most people prefer to invest in what is visible, in the car, in the property, in the window, and it neglects the invisible, which in fact sustains everything. You may lose money, you may lose an investment, you may waste time, but if you keep investing in your ability to think clearly and act wisely, you will always have a way to rebuild yourself, and faster than you imagine. When I was young, I devoured investment books, but what really made a difference was the communications course I took with Dale Carnegie. That taught me how to express my ideas clearly, and it helped me persuade, negotiate, lead, decide, i.e. make money with ideas, not force. The market changes, fashions pass, cycles go up and down, but your mind, she goes with you until the end. And if it is well trained, well cared for, and well used, it will take you places that no physical asset could take you. So if you really want to get rich, start by investing in something that many ignore, the person you become along the way. Because at the end of the day, the assets you own matter. But the asset that you are, that changes everything.